Welcome to the Specialist Trading Weekly E-mini review for the week ending December 17th, 2010. I recently gave a webinar where I spoke in detail about strategy number one, a great strategy for day trading, the E-mini. And we received many new members from that webcast that I gave, but there are still a lot more questions that need to be answered. So I'm going to cover some more information concerning strategy number one and how you actually could have made some money the very next day using the same rules that I explained in the webinar. But before we begin, I want to remind you all that we are in a current promotion with Global Futures. Global Futures has been my broker, and they're a highly reputable futures firm. If you're not happy with your current broker, or if you're new to futures trading and you want to know where to execute your trades, such as from strategy number one, which I'm going to be talking today, or all of the strategies that we have for trading E-minis, we really recommend you speaking to the good folks at Global Futures. Specifically, Michelle Jimenez, she's the premier broker there at Global Futures, and you can reach her directly at 818-670-7733. Remember, if you mention coupon code SB20 and receive or open and fund a new account, you're going to receive 20 free contracts. So it's a great deal. Tell them that Specialist Trading sent you. Now, as always, before we begin, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results from trading strategy number one from this past Friday. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we'll begin this week's review. All right, as I said, I conducted a webinar actually Thursday, yesterday, just going over strategy number one, and I went into detail and showed some past results and showed some recent trades that we've had that could have used intraday trading strategy number one, specifically with the E-minis. And we had some new members come on board because they liked the presentation and they're interested, and they had a number of questions, and I wanted to show you how you could have applied strategy number one the very next day to a 2-minute chart, because most of the questions were geared towards trading it on a very short-term time frame. A lot of the students like a lot more signals rather than if you're on a longer time frame, such as a 10-minute or even a 30-minute bar, you'll get maybe 2 to 3 signals a week, maybe possibly less than that. But if you want to get that many signals per day, we suggest going down to a 1 to a 2 minute. Now, had you looked at a 2-minute bar, here's what could have happened, just from the rules and everything that I gave from the webinar on Thursday and from what our past students have learned from the video learning section. What we first want to do is recognize that we add our buy-sell line. That's a 50-period simple moving average. And then with strategy number one, what we're doing is we're applying the 21-period Donchian channels. Okay, and then we want to see that price is relatively below the 50-period simple moving average, and that all three Donchian channels are headed lower, as we see right here. Okay, once we get that confirmation, we know that we have a short-term downtrend in place, and looking back in hindsight, this would have been a great place to go short. Well, if we follow what the 2-minute bars are doing, we see that we have a really nice rally here, and we actually have a setup bar. These are our setup bars. Now, this is the setup bar, the formula, once again, that as students you must learn this formula, how to calculate what a setup bar is, and we give you all that information on our website. Once you've, and it's very simple to see, but once you finally understand how to do the process of finding out what the setup bar is, you're going to go short if you trade one tick below. That's represented with this green horizontal line here. So as you can see on the very next bar, we traded one tick below. So you would have entered short at 12.37 and placed your stop about a half a point above the high of this most recent rally right here. Okay, so you're either going to get stopped out or the trend is going to resume back in the downward direction, which it did. And once it touched the lower Donchian channel, that's where you cover it. So you made a quick 2 points in about 10 minutes. That's how simple it is. But we're not going to sit here and guarantee you that all the trades are profitable. We know that after trading for so long that doesn't happen. So let's see what could have happened here, because if we follow along, roughly about 2 hours into the day here, we've already got a 2-point gain, but there seems to be another setup taking place. We're having a nice bounce here, and we have another area in which we'd like to take advantage of going short right here. Well, it just so happens that there's another setup bar. According to our calculations and our requirements, this is a valid setup bar right here, circled in blue. So we entered short once we traded one tick below that setup bar at 12.3650, and we placed our stop a half a point above. Unfortunately, as you can see, we never continued in that downward direction. We started to get a rally, so we got stopped out at 1237.75, and we lost a point and a quarter. So for the very first two signals of the day, we're roughly up on balance 3/4 of a point. We gained 2 points on the first trade, lost a point and a quarter on the second. Now let's see if we had taken every signal, because later on in the day, around 11 o'clock Pacific time, there was another signal using strategy number 1 to go long. As we see here, we are now above the buy-sell line, looking to go long, and we also have the daunting channels now headed upwards. So according to our calculations, this is a valid setup bar right here, circled in blue, and we traded one tick above, so we entered the trade long at 240.25, placed our stop just below here. And this was a very, not a very high profitable gain trade, but once again, if you had taken each and every signal, you would have exited, you'd have had about 4 or 5 chances to exit at 1241, right when price touched the top daunting channel. So you made a quick 3/4 of a point. Not a huge gain, but remember, this is one thing we want to tell all of our students. The smaller time frame you go, you're going to have less risk, but your gains will be less as well. So this is something to note. If you want to trade larger time frames, anywhere from 15 minutes to a 30 or even an hour, you're going to have a larger risk, but your gains will be larger as well. So these are things you need to know. As well, when you go to a smaller time frame, you're going to have a lot more signals and chances to trade. When you go to a larger time frame, you'll have less signals. So these are all things you have to decide prior to entering into the trading. All right, so on that trade, we made a quick 3/4 of a point. And now if you had, the wherewithal to trade up until the last minute, which many of my students do, and you can have some very nice setups from time to time, we had one last setup to go short in the last 15 minutes of the day. And remember, if you're trading a 2-minute time frame, that's a very substantial amount of time to have the trade unfold out into your favor, because we don't need most of the trades last about maybe 10 or 15 bars. So with a 2-minute time frame, you had more than enough time to actually implement this trade. So as you can see here, coming into the last 15 minutes, 20 minutes of the day, we are now below the buy-sell line, and the 3 daunting channels were headed lower at this point. So we have a valid setup bar right here, circled in blue. The minute we traded below that setup bar, which we calculated, and very simple to do, we went short at 1238.75. We placed our stop just above the high of that current rally, and in about 6-7 minutes we covered with a nice 1.25 gain. See how simple that is? Very basic. All we're trying to do is find the trend and then enter on pullbacks within that trend. So these are the same rules, the same highlights I discussed in the webinar. The very next day you would have had 4 trades on a 2-minute chart, okay? Using strategy number 1 on the 17th, the first trade would have made 2 points. The second trade, you would have lost a 1.25. The third trade, you would have made 3/4 of a point. And the last trade, you would have made a 1.25. So on balance, basically, you would have made nearly 3 points, about 2 3/4 points on this day, which is a very quiet day, actually. There wasn't a lot of volatility. And you had 4 trades, which is about average, but there wasn't a lot of, room to move. You had to kind of sit and wait for these setups to take place, only looking at the 2-minute time frame. But let's say you just focused on the 2-minute time frame and you took all of the trades. If you were able to repeat this on a daily basis, once again, we're not guaranteeing this, but let's say this is a very average day. If you were able to repeat this 2 3/4, you're roughly looking with one contract over $2,500 a month in gain. And if you had a couple of contracts, that's over $5,000 or $60,000 a year. Now, if this were able to sustain this type of performance, and we're not going to promise it, but it's very reasonable goal to achieve just using strategy number 1. Remember, we have upwards of 10 strategies here at Specialist Trading, so you can always move back and forth into another one. Each comes with different rules. Each comes with a different persona. Some will keep you in a lot longer. Some will keep you in a lot less. Some are more conservative. Some are higher risk. So that's why the beauty of all these strategies are meant to fit all the different environments and volatility ranges within the current setup of the market. But the first thing you have to do is learn these strategies. You have to understand exactly what the entire process is. It's not just enough to come to these weekly webinars here and your eyes light up and go, boy, this is so simple. I'll start trading 10 contracts tomorrow. So many students do that and they fail and they don't understand why they're not making money. It's because you don't understand the process and you're not executing the strategy properly. So learn the strategy, go to a video learning section, know all the rules, know how to spot where the setup bar is, know the different places to place your stop, know the different exit levels, and then, paper trade for a while. Once you get it under your belt, then commit to small sizes, one contract at first and slowly build up. Our edge here is consistency. Remember, we're just trying to be consistent and hit these nice singles instead of looking for home runs. All right, if you have any questions concerning what we went over today, anything on the website, anything out of all of our strategies, please do not hesitate to email me at stephenprimo@specialisttrading.com. And in closing, as always, we ask that you take one last look at our disclaimer. I showed you some great performance results the day after my explanation on the webinar about strategy number 1, how you could have made money just from the very next day looking at it. But remember, I can in no way guarantee that any of these results will be repeated in the future. Have a great weekend. We'll see you next week. Bye-bye.